All right, everyone, welcome back for another episode of This Week in Charts of your carnivore trades in Wall Street from Main Street. Starting off with the SP 500 here. You can see we had a bit of a flattish week. If you look on the weekly time frame, really not much going on, not a very big range here. It was an OPEX week, so lots of institutions pushing stocks around, a lot of calls to be burned out in this market. The big winner, however, was the NASDAQ. So if we look at the triple Qs here, so the NASDAQ getting above this trend line that we discussed here over the last couple of weeks now. I want to point out the MACD because we've been talking about this. So we are getting very close to that upper line on the MACD, and every time we've hit that, it's coincided with a touch of this trend line here on the actual chart here, and then the MACD trend line is coinciding as well, and it is diverged, bearish diverge. But as of right now, the NASDAQ did close above that trend line on the daily time frame, and it is holding up for right now. And we do have a holiday week next week, so we could see some light volume, maybe just some kind of really choppy action, nothing really of note unless we get geopolitical news. But I think the week after that is when we have to be careful for on the NASDAQ, as the MACD is starting to get into that risk area, and the NASDAQ is getting very extended. Now, the one thing that everybody's talking about right now is the advanced decline ratio. Lots of NASDAQ stocks hitting lows, new lows, and very few of them hitting new highs. The main ones hitting new highs are Apple, Amazon's very close, Microsoft, Google, the usual suspects, right? NVIDIA has just been a freight train, a runaway train, really. And it's, the usual suspects, the FANG names. There is lockdown talk, so maybe that is helping some of these names out. But the rest of the market, the breadth is not very good. Overall, though, as long as these companies can keep the market higher, and as long as these stocks do hold on, the markets will remain buoyant. However, you look at the Dow, for instance, which has a little bit less tech in it, that is coming in back a little bit here. The Russell 2000 also coming in a little bit here. Now, the Russell 2000 is an interesting setup here. So we have this this breakout, and now it's kind of failing here. But if this does catch a bid, maybe around this 230 area, maybe this low of this green bar here, so that would be around 228, gets into that area, it could actually be a fake out in the other direction, and the Russell could advance here. So I'm watching this setup here on the Russell for a potential move here. But Russell and Dow weaker, and even the S&P was a little bit muted, but it's really that the NASDAQ, which is so tech heavy, that's really leading the market, and it's gonna, as long as those stocks hold up, this market will hold up. So that is the look on equities right now. Let's take a look at crude. So crude pulling back in a little bit again. So we talked about the 85 area. If we go back to this broadening pattern we talked about, it said 85 would hold. It has. And I thought that the NASDAQ would, or excuse me, that crude oil would have a chance to move up towards 90. I still think that's possible. So if we take a look here, you got some support right in here around 76, 75. You got the 100 MA. If we look on the weekly, we have the weekly 20 MA, and I said that could be a possible area for a pullback here. I think ultimately if crude catches a bid off of this area, which it should, and it starts to advance again, we can expect to move up to possibly $90. So we talked about that for quite a while now, and it takes time to play out, but if we look on the monthly, that's kind of where the logical major resistance would be on spot crude oil. But for right now, crude coming back in, it does have some support in here. Let's take a look at XLE, because this one got hit pretty hard. XLE coming and cutting through that 50 MA on the daily, had this kind of bullish pattern setting up, and then it started to roll over. So we have to watch these energy stocks. If they remain weak, XOP coming back in. Look at the OIH. We talked about this yesterday in my daily analysis video. Look at the OIH is trading past the October lows. I mean, so this is erased this entire rally here. So we got to watch these names. If these energy plays start to really come back in, that could be a leading indicator for the price of crude oil. But as of right now, the price of spot crude is holding up. Nat gas. So we talked about the head and shoulder. That has now been negated on a weekly time frame. So this pattern does no longer matter. So nat gas can possibly advance here, but it's got a lot of resistance up at the top of this red bar at 566. As of right now, it's not really showing any one direction just yet, but it's holding up, and it did negate that head and shoulders, so that gives it a little bit of a positive there for Natty. Let's talk about gold. So gold pulling back on Friday. We did have we do have the commodities expiration on Tuesday, but we had the GLD and the SLV equity expiries on Friday. So that did come back in a little bit. We'll talk about silver in a second, but gold actually holding up really well. This is kind of what you want to see it to do. Excuse me. You do also have an inverse head and shoulders here on gold. It's just trying to catch up to that 20 moving average. Now, you do have a little bit of resistance up here, and that's why it kind of stalled out. But we want to just see gold, consolidate a little bit further, and then it can get juiced. And if it breaks through this, that would trigger a bigger inverse head and shoulders, which would take you right up to the highs. And that's where you would probably stall out, at least in the near term. Let's look at silver. So silver got hit a little bit. This was really disappointing to me yesterday. We were looking to play this long, but this closed below the inverse head and shoulders neckline. Tells me it probably has some more downside in it. Now, I still think silver advances. I still think silver can get up into this, 27 range before it stalls out. But I had a much higher price target for it before it closed below this inverse head and shoulders on Friday. But if we take a fib here, we can probably look to for it to pull back maybe to that 382, maybe the 50% even. So that 2340 area, somewhere in there. But yeah, that they really, if we look on the intraday silver here. Now the silver closes, the CME closes at 2 p.m. the contract rollover. Look at when they hit this. Excuse me, at 1:30 p.m. So at 12:30 they immediately hit it with a sell order to knock it down before the CME close. Just typical OPEX games. It's the type of thing that happens all the time, especially in the metals market, as you guys all know. I don't need to tell you about that. But yeah, silver taking a hit, a little disappointing, but we're still looking okay here. So nothing terrible, but I think there's a little bit more downside. By the way, a good way to play this, actually, Jason was the one who pointed this out to me. It was a really good find. I like this ETF. So this is GOAU. It's called Go Gold. Basically, it is a ETF that is a basket of royalty and streaming companies. So you got Franco-Nevada, Wheaton Precious Metals, Sandstorm, all those good ones in there. And it's just a good way to get exposure without putting yourself at risk of just one company. One company has a bad quarter and you're in them and they get hit. This gives you a little bit of it manages your risk a little bit. But this is a nice little ETF here. So I will be looking to play this for a swing trade at least in the future myself. But this is a nice little ETF here. And then again, this one seems it's more of a gold. It seems to track the price of gold a little bit more. It looks more similar to the price of GDX here than it does to an SIL. So you're going to get more gold exposure with this ETF. So generally we would refer to our technical analysis of gold to assess this one here. But I think this has got some good support around 1850. It should get a bounce right around this $19 area, but a little bit lower in that 1850 area. And if it got all the way down to 18, that would be probably a home run pickup there. But in any case, like this little ETF, that's a nice little find for us. Let's talk about platinum also. So it finally broke below this kind of upsloping trend line. But to be fair, this was a really steep trend line here. So, it was a little bit due for a pullback, anywhere in this 50% range. 50% retrace around the $1,000 even number handle. Maybe if it gets a little bit lower to 900, I could see, but it's going to have a lot of support here. You broke through this area, so that would be support. This would also be support right here. So, that $1,000 handle is going to be a good area for a pullback. Palladium also pulling back as well, but finding some support at that 20 MA. And it's just kind of, Palladium's been a little bit, of the weaker of the precious metals here, but, generally trading in the same kind of direction. Let's just move on here and talk about, so uranium here, URNM getting a little bit of a pullback here to the 50 MA. Again, it's been a little bit overbought. I mean, you had this massive run, then you had a pullback, and then another sharp increase, a pullback, a sharp increase. And it's really just it's been a volatile market here, but a little bit overbought in the near term. Nothing wrong with a little pullback here. Let's see, URA, same kind of deal, CCJ. These names they're just really, this is what a bull market looks like though. They're going to have big moves to the upside, and then they're going to have shallow pullbacks. But, these types of dips can be bought, especially if you're looking at this with a, as we've said before, a 5 to 10 year horizon, a time frame that you're looking to invest in. But in any case, you guys take care. Thanks for watching, and I will talk to you guys next week.